Welcome to Surgeon Syndicate. If you're paying attention, you know that you only make money when you work. It might be great money, but it's dependent on you. The information on this podcast will help you solve that. We interview experts and provide analysis into financial freedom through commercial real estate. Why? To help physicians like you thrive. Let's dive in.
Welcome to Surgeon Syndicate. This is your host, Dr. Michael McManus, and we're here today to talk about perseverance in our real estate journey. I chose this topic today because I'm in the middle of a big move right now. We've talked about a little bit before that we're in the process of moving from Green Bay to Salt Lake City, and a lot of the reason for that is because of the real estate opportunities in Salt Lake City, and for some other things like the skiing and some of the other amazing things in Salt Lake. But, perseverance here, the last year has been a tough time to get deals done because after interest rates went up, seller expectations of prices didn't change as fast as the dynamics of the deal did. So when interest rates went up, puts more money into your cost of financing. And so a price that used to work may no longer work to make a deal cash flow. So at lower interest rates, things are worth more because there was less money being spent on financing. But then as this changed, buyers changed what they're willing to pay because you still have to make the deal work out and underwrite. But sellers still had an idea in their head of what properties were worth. And so there's been a transition here since interest rates came up from that, all-time low to where buyers decide that it's time to sell and that they're willing to sell it for a lower price than maybe what it was worth a few years ago. The interesting thing here is because we still hear all kinds of things like, when will interest rates come down? We're actually more now at what's a normal interest rate environment, where before it was super low interest rates. And there's a lot of people, and this was interesting. I kind of, walked back through, the timing of how old people are. There's quite a few people who their entire adult life has been spent in artificially low interest rates. I mean, we've basically been in this environment since 2001. So coming in on a quarter century of artificially low rates. So that means there's a lot of people who really have never seen 7% as a normal interest rate environment. And so, we're going to see a lot of changes here. And I may be wrong. I think we're back in normal rates versus artificially low rates. A lot of people still feel we're in a high rate environment. So we'll see where that goes. But it's meant that there has been a lot of perseverance over the past year or so with still looking for deals, with deals not working out. Now, part of what this might be happening is there may be more buyers going away, people who thought they wanted to work in real estate, and now their whole paradigm they learned has changed, and so they may have decided to leave as the number of people chasing after things goes away. This also helps sellers see that the demand has gone down. So this perseverance has really been key during this time to keep going. Now, perseverance, it's interesting. There's a lot of different things in our lives where we see perseverance, and sometimes we miss where we need to, for the doctors out there and a lot of other high-income professionals who are the accredited investors. When we see the end and know what the end is, it's easier to persevere. Like medical school and residency. Medical school was really hard. Residency could be really hard too. And during those times, you knew there's a timeline. And so to persevere and go, okay, I got to get through this next year or this next rotation or through residency, where the timeline is at. That's well established. But when we come into real estate, it's not so well established. And we don't know how long we'll have to persevere. So that's kind of been a big question. The other one, and for the people out there who are passive investors, it's an interesting time because if you look back to a few years ago, everybody was promising great deals. Everything was a 7, 8, 9% pref. And then with an IRR, above 20% was a very common thing, and kind of what we got used to expecting. And then those, not only did those offerings go away, but a lot of them didn't play out as they were advertised. I would say out of my passive investments, we had one that needed to be sold because they were on some short-term mezzanine debt. That was one that going into, I'll admit I made some mistakes on that and maybe shouldn't have liked the debt on that deal, but I liked the sponsors, and the sponsors on this one were smart, and they saw the change in interest rates. And they immediately started working on selling that deal because they weren't going to be able to refinance the way they had hoped. And it was a little touch and go for a while. We got out of it at like a 12% profit, which in the end was pretty good. Didn't see any capital calls. I still haven't seen any capital calls. I know a lot of passive investors who have had capital calls, and a lot of that is, this kind of understanding, and everybody had a different perspective on what would happen going forward. But for passive investors now looking for deals, a lot have been unnerved because they've had capital calls. They've seen deals go bad. Some may have even lost capital, and then they decide, well, I'm just going to go back to the stock market. And the stock market's been doing great things right now. So investing in real estate, this all comes back to, do you want all your money in one place? Are you investing for diversification? Are you investing for tax reasons? What is your why of where you're there? And when you have that why, it helps with the perseverance to say, no, this is part of my long-term plan. For me, it was that I had seen what real estate could do to me, it could do for me, and I liked that. And also as I looked around at the wealthiest people or the doctors who were retiring early, they all had significant assets in real estate. And the people who were relying more on the stock market was more of a, it was a roller coaster ride. Yeah, we're doing great. Look, I'm gonna do this. Oh no, it's down. I lost 30% of my portfolio. And I think you still get there. It's a different ride. And for me, I didn't like that experience, and it wasn't me getting me where I needed to go. And so real estate and seeing what it had done for other people is what drove me. So I had my why. I believed in it. And so the perseverance was easier as a passive investor and as an active investor. So to close this out, other story of perseverance in life, because, as we're making this move, the perseverance that's been required over the past week and just believing we're going to get there. So the way we decide to do this move is, and my wife gets all the credit because she's been the one out there doing all the work on this, is we originally got quotes from some of the big moving companies, and anybody who's moved with them knows that they're incredibly expensive. And a lot of the time, if it's paid for by an employer, by a company, it's like, who cares? And we've done it that way. But we got the quote on this one, and it was more than we were willing to pay. And part of this is, you know, I've had some good success over the last few years, and we've moved into different houses. And as you get a bigger house, you get more stuff. And as you get more stuff, if you want to move it, it costs more. And now we're downsizing, and you're trying to figure out what you're going to keep and what's going to go. Well, the moving company, they just come in and they just assume you're going to move it all, and they give you this big price. So my wife decided, no, she went through this whole process and the up and down of getting these quotes and being like, is this real? And then started looking for other options. And so what we finally settled on was using a company called UPAC, where basically they bring you a truck and they drop it in your driveway or on your street, and it's for you to load. Well, we didn't want to load the truck and we didn't want to do the packing. So we found a local moving company that didn't do, cross country moves, but they could do the pack and the load. And, we looked at the cost of the truck and the cost of the move. We were looking at less than half of the cost of the major moving company. So we're like, all right, we're all set to go. Well, then they come for the first time to start the packing, and they were nice kids, seemed like they knew what they were doing. But at the end of the day, after they leave, my wife goes and checks some of their work. And just in the kitchen, like the first couple boxes, she picked up, shook them a little bit, and could hear, glass dishes rattling against each other. So the boxes were poorly packed. And we've moved enough. We started unpacking some of these boxes. I can tell you if we had stayed with them and left this stuff packed the way it was, when we got to Utah, anything breakable would have been broken or almost all of it. So we would have paid to move it and then thrown it all away anyway. Wasn't a good option. And anybody who's moved with a moving company knows this can happen with any moving company. There's some that are spectacular, some that are horrible, and everything in between. And it can be really hard to figure out who the good ones are. Well, so we go through and spend the next day kind of trying to figure this out. And we unpack pretty much almost everything they did and started repacking it. Good news is, they got a lot of stuff off of shelves and all centered together. So it still moved things along. We started calling some of the other local moving companies, and one we'd used before who we know is really good. They were booked out. That's what happens when you were good. So we started calling up friends because some friends had offered to help, and this was an overwhelming job because we're moving out of a pretty big house, and was pretty sure that just calling friends we weren't going to get there. So this whole thing was this act of perseverance of, okay, we're going to start, we're going to get going. Well, it turns out a couple days later, these friends call some friends, and I have to give credit. It was all within their church, and these people showed up. Half of them I knew, half of them we hadn't seen before, and they came and they saved our bacon, man. They were amazing, the most amazing people. I will be eternally grateful for the help they gave us and what that did for us. They also, out of that group, we got a recommendation on another moving company who is a friend of theirs. They on short notice had some time, so they came a day and made amazing progress. They brought it was just a crew of three, and the amount of work they got done and some of the tough truck loading they accomplished was amazing. So overall, the whole thing was this up and down. We can get a few people here for a while, a few people there for a while. So our whole plan fell through. Now, that was the act of perseverance. And it really did keep this just like, man, we just got to keep going. We got to figure this out. And we didn't really have a way out. The house is under contract. It's closing, July 1st. So kind of like medical school where, there's a timeline, you just got to figure it out. Sometimes it's tougher in real estate when you don't have that timeline and you just have to decide this is your path and I'm going to stay on and I'm going to keep working. We're going to find the deals, whether they're active or passive deals. But that's a true thing, an important thing, because I don't know any real successful investors who don't have stories of success and failure, who don't have stories of dry periods where there just weren't deals out there. And they all reach this level of success through perseverance. And at some point, you hit this level where you know enough people, you have access to enough deals that things start to roll. And I'm starting to see that now on the deal flow again. I'm seeing deals that were falling through and now they're coming back. Sellers are more motivated. And I think the motivated seller now is the one who understands the property's not worth what it might have been 3 years ago. So the perseverance is starting to pay off. And so I encourage all of you, whatever your challenges are, persevere through them. Find out what your why is. Get your vision of where where you want your life to go. And then you can build a plan to get there. And as far as real estate is concerned, it's the same thing. If it's a key part of your plan, if things aren't working the way that you want them to, you got to find some more resources, whether it's different people to put in your network, different groups to join. There's lots of groups out there, and finding one that's a good fit for you and can help you learn. So I hope this has been helpful and has added some value to you. If we can do anything else to help you, reach out. Let's have a conversation about the things that maybe you need to continue this journey and where you want to go, and see what else we can do to help you there. You can find a spot to schedule an interview, to schedule a conversation. There's no sale here, no commitment. We're looking at some different stuff too to see where we can serve you better. So talking to folks, we get a little feedback on what they need. So you can schedule a call with myself on surgeonsyndicate.com or at thefortresscapital.com. and let's talk and see what more we can do for you and help you along your journey. Thank you for joining us today on Surgeon Syndicate, and we'll see you next time. This has been an episode of Surgeon Syndicate. If you got value from this episode, you know other surgeons are hungry to become job optional, and you can help them by sharing this content today. Schedule a call and we can make a plan. Looking forward to having you with me on the next episode.